Welcome to commercial flood insurance market. Everything you need to know about commercial flood insurance is what we're going to be discussing in today's series. We're going to discuss things like flood coverage, letter from app amendments, premium rates, disaster assistance and loans, the difference in 2.0 with the National Flood Insurance Program and private flood. We're also going to be talking about repetitive loss properties. So who are we? Well, my name is Chris Green, president and owner of the Flood Insurance Guru. And let me tell you a little briefly about my story and why we're here to help you today. You see, I bought a house in a high-risk flood zone about 12 years ago. A real estate company didn't know what they were doing at the time. The insurance company didn't know what they were doing. Even the real estate company was a bit confused. You see, I was told my premiums were going to be $3,000 a year. 10 days before closing, was told closing was not going to happen. Well, because of my educational background in flood mitigation, I was able to show how a house was built within compliance, take that $3,000 rate, turn it into a $300 rate, and that's exactly what I've been helping people do for the last 12 years. We're a little bit different, as I mentioned. I have a master's degree in emergency management with a focus on flood and hazard mitigation, former storm spotter, storm chaser, with more than 15 years of experience in the flood education, flood mitigation, and flood insurance industry. We specialize in flood in all 50 states, and we've been creating educational content when it comes to flood education, flood insurance, and flood zone changes for the last 5 years. Later on in this presentation, we'll show you our learning center that could be a resource for you, where we post all this information as well as our YouTube channel. So let's get started. When it comes to flood insurance, buying flood insurance can be complicated and confusing, but it doesn't have to be. And today, we're going to show you some ways to simplify this. So let's start with 2.0. Now we're talking about risk rating 2.0. This is the new National Flood Insurance Program that went into place in 2021 for new business, 2022 for renewing business. The rating change programs here have changed to address more of an individual structure in an entire flood zone area. When you're talking about NFIP legacy, that's what you'll hear me call it from here on out, versus 2.0, there are some things that are different. Now, flood zones no longer determine flood insurance rates with 2.0. So that's one thing that's a big difference. Prior claims still have a big impact. However, things that have an impact on the new program compared to legacy are like distance to water, the type of floods, cost of rebuilding, flooding frequency, even the first floor height, all have an impact in the new system. So what about coverages? Well, on the commercial side, the coverages with the National Flood Insurance Program 2.0 are still at $500,000 per building and $500,000 for contents or business personal property. So what about wait periods? Well, the wait periods haven't changed either. It's still 30 days as your standard wait period unless it's for a loan closing or it's a newly mapped area, which has a 1-day wait. What about business loss of use? Business loss of use is still not available with 2.0. Neither is additional living expenses. So what about builder's risk? This is something we deal a lot with on the commercial side. When someone's building a structure that's in a flood zone, well, these are post-firm structures, which means when they're built, they've got to be at the flood management guideline compliance anyway. So they're generally going to be out of the flood zone, but they may require flood insurance while they're being built. These structures generally do not have walls and roofs up yet. And so, you may have flood losses that cover things like materials that are stored correctly. You're going to have what we call double deductibles. What this means is if you have a $5,000 deductible on the building, it's going to be generally a $10,000 deductible when it's being built. So what about flood losses? How do you find commercial flood losses? This is a big challenge for property owners. And one reason is that FEMA currently only provides this information to the actual property owner. They usually do it through a knowledge form once a year. If the property owner wants to email in to FEMA or call FEMA, FEMA will send them a list dating all the way back from 1970s to current time period of those losses. Now let's talk a little bit about these losses. These properties may continue to flood. These are called repetitive and severe repetitive. These are properties that have flooded multiple times within a 10-year period. Now these generally have higher premiums. You generally cannot do flood insurance through a write your own carrier, but instead these have to be done through a program called NFIP Direct. This is when you're going directly through FEMA. Now, what can you do on these properties? Well, Thankfully, with the new 2.0, we're seeing these premiums be a lot less right now. But then when a flood happens, the claims variable is going to be used. So if a property's had 4 losses, 5 losses in a 20-year period, then they could be used that as the claims variable on top of that 18% statutory rate increase. So it's important to understand with these properties when you go to file a claim. Now, what are the flood insurance options on repetitive loss and severe repetitive loss properties? You've got the National Flood Insurance Program, as we mentioned, directly through FEMA. Then you do have some private flood insurance options that will write these policies on these properties if there haven't been any losses within 5 years. Does risk rating 2.0 mean your rates are going to double? No, it just means the second version of the program. In fact, in many conditions, we actually see where rates are going down compared to going up. Now let's talk about the 80% rule. This is where a lot of properties get in trouble, especially on commercial, and that is that you need to insure for 80% of the replacement cost or the max coverage amount of $500,000 on commercial with the National Flood Insurance Program in order for that policy not to go down to an actual cash value policy. Now let's talk a little bit about flood zone changes known as letter of map amendments. We're going to talk about pros and cons. Moving out of a high-risk flood zone where it's no longer required can be very beneficial. Could, on the private side, mean lower flood insurance premiums. It could mean increased property value if flood insurance is not being required. It could also possibly mean more flood insurance options because it's considered to be a lower risk area. The cons, though, is that business owners assume if their flood zone has changed that the property is not going to flood, and this just isn't the case. Almost 30% of properties in low-risk flood zones are flooding. This is where about 30% of claims are coming from. This creates the misconception that people don't need flood insurance in these areas when in fact everyone does. Now let's take a brief look at private versus risk rating 2.0. Wait periods. Remember, wait periods range with private, but they're pretty across the board the same with the National Flood Insurance Program. Coverage amounts on commercial. Legacy and 2.0, as we mentioned, coverages didn't change. Still $500,000 and $500,000. However, on the private side, you might be able to get up into the millions. Now, what about business loss of use coverage? This is not available with the National Flood Insurance Program, but you may be able to receive this through private flood insurance companies. This could help your business continue to go through a flood. The majority of businesses do not open back up after a flood, especially ones who didn't have flood insurance. So wouldn't it be nice if there was something out there, some kind of resource to help your business going after this flood? Well, this is exactly what loss of income and loss of use protects property owners against after a commercial flood loss. Questions? All right, now let's move on to disaster assistance versus disaster loans. One has to be repaid, one doesn't. Disaster assistance and disaster loans generally both have the condition of a presidential disaster declaration has to be filed. Disaster assistance still has to be applied for and is giving out based on funding by FEMA. Disaster loans usually are done through the SBA disaster loan program, and you still have to qualify for them like a traditional loan program. Now, when it comes to disaster assistance, these amounts will range based on what the community qualifies for. On disaster loans, you could get a commercial disaster loan up to $2 million with a low percentage repay up to 30 years. Now, here's our Learning Center. If you want to learn more about disaster assistance, disaster loans, different grants in your area, flood map changes, all the different things when it comes to commercial flood insurance, visit floodinsuranceguru.com, and our Learning Center is at the top of the website. Here's another risk tool as well we've built to help people on our website. As you can see here, we've got an address in here. You submit it in there, and it will give you what you need. It's important that you always remember that an inch of flood can cost thousands in flood loss. In fact, many people say an inch of water could cause up to $25,000 in damage. I want to thank you for your time today. If you've got questions about commercial flood insurance, maybe how we can help improve your commercial flood insurance situation, it's pretty simple. Reach out to us, floodinsuranceguru.com, email us, flood@floodinsuranceguru.com, or just simply give us a call, 205-451-4294. Thank you.